Hi everybody, it's Fed Minutes Day. How's everyone doing? Good morning, John, Hassan, Arif, Patrick, Glenn, Zia, Tamaz, how are you? So I want to start off with the S&P, and on the S&P I talked about an off number here, so let me get off camera. Pulled you up to the weekly on Monday, the day before the 4th of July, and showed the off number here was 2437.30. So I use those as entries and exits, and if you took it as an entry, you did pretty well on at least a day trade. I think it may turn out to be more than that, but it bled through it by a handle, by 140. But see how these off numbers come into play? That's why I keep bringing them up, because then you have a tool you could use. It's pretty simple. Gave you a good signal. Everyone's starting to get the hang of taking a look at 2-week off numbers. Hi, Dan. How are you? Kevin? Jacques, how are you? So we'll see. If we close by Friday under 237, that'll be the second confirmation that leads me to believe. I still think we're going to have another correction. For people that have been following me for a long time, what kind of low is this in the S&P that we had on the big break from last Friday? What kind of low is that? Reading's 21. I know people have been hanging out with me for several years know what kind of low that is. Dan, what kind of low is it? Come on, this is your pop quiz. Confirm low, BW. No, it's confirmed, Papa. All right, so we have a confirmed low. So what are the probabilities when you get a confirmed low? What's the message? What's the implication? What's the implication when you have confirmed highs and lows? Okay, so why not something like this? And this could be pretty deep. I think it's going to take us under 2400 for a third drive. Something like this. It's going to take you way deep down. Below that. Let me just tighten this up. Oops. Magnet. Anyway, it looks like it would be about 2380-ish on the S&P. So that could be a big trade from here. You can manage a trade. You know how I believe in taking half off. You know, within a few candles, you would have had over 10. So, you know, you're probably in a half position. So now you could just go with the BE stop here at 237, get out of the way. It should have trouble getting over 32. If it doesn't get over 32, I expect 24 to be taken out. 37 from 24 is 13. That's going to give you about here 2210, 2211. And there are a couple other things I want to talk about. Euro, get to the majors. I had Grega's stuff up on the Euro. Perhaps we get some type of pop in the Euro, but it's looking heavy, and this is just corrective. I would wait to see if we get some type of rally back to 114. I would not chase this grinding decline here. And I wanted to touch on a couple of the yen crosses as well. And I know that there's some differences of opinion here. But when you look at the Euro-Yen 4-hour here, we diverged. On the 4-hour, it's glaring. So I know that some of our research says 130 is possible, 129, 130, but look at this last reading here. 67 on this candle. Looks like 1, 2, 3 to me. I'm not saying that 3 can't extend and that we can't get.
Good morning, my friend. Good morning to everybody. I hope you all had a nice 4th of July. Most probably, Dale, we're very, very close, or at the very final stages of wave 3. You remember we had said that we were expecting a correction lower, but then another high. So I don't think that people should be hasty in selling this move, but because I think that there is at least one more thrust higher afterwards, after a small correction or whatever.
Okay, well, there is an outlier on ForexAnalytix, Steve. I know the majority of them, and the outlier would be the completion of an ABCD to 130. So we're not that far away. That's next work. So also, I saw a tweet. A lot of people are real bullish yen now. They're calling this a breakout. And when I start to look at the yen, I have another 3 driver there as well. So I wouldn't sell the euro yen in the whole, but I would sell some type of rally, 910, 50, maybe back to 880, 890, and if you're right, be wrong over the high. And CAD yen has a similar look. And I know that people have been trying to short CAD yen too, but to me it's starting to look pretty heavy here as well. CAD yen beginning to roll over. That's just a 15-minute chart, but you go to 1 hour.
So far, 8 consecutive days up. If we also count 2 more days, that would make them like 9 out of 10, including today. So yes, is there a pullback imminent? Yes, it is. Is it going to be a complete reversal? Most probably no.
Okay. So why don't you take over?
No. You were doing actually.
Okay. It's all right. Go ahead.
No. Didn't you have other person you wanted to talk about?
I think I've covered it, and just taking a look at the yen.
Okay. Yeah. Sure. Okay, I'm already having
yen,
some.
Yen could go 114 maybe if it can get up to the line, but I'm starting to get some divergence here too. So I'd be nibbling for these corrections, because you know what, I have a hard time being perfect. But you know, last week, Steve and I agreed and disagreed on the yen, and we both were right. So I got the 100 pip pullback that he said was a buy, and the pullback happened, and the buy was a good buy. So I'm just talking about what I'm seeing now. These are now ideas when I come in here. Okay, go ahead, buddy.
I don't have much to say about the yen. I mean the USD yen. Fact remains that I do see some divergences, as you say, if we go to lower time frames. But fact remains that we made consecutive breaks out of important levels. We broke the descending wedge. We broke the descending channel. We broke the 116 to 112 important zone. We broke this descending trend line, and now we just have to take out levels one by one. I mean, previous highs, like the next previous highs, the 114.40, let's call it roughly. Then it's this area around 115.50, etc., etc., etc. Are we gonna move like in a straight line? No, we're not. Do I remain bullish? Yes. As a rule of thumb, I will tell you that even if we see a retracement back to this 111.60 to 112 zone, I still remain bullish as long as that zone holds. And that more or less covers how I'm viewing yen pairs as well. I mean, since I believe that until proven otherwise, the USD yen remains strong. I obviously, even for currencies that I consider to be weak, we had this conversation actually on Monday, I would rather sell them against the US dollar then sell them against the yen. Oppositely speaking, currencies that I believe that will be performing well, I would rather buy against the yen than buy against the dollar at the moment. So that's exactly how I view things. So this also encompasses my view on all the yen pairs, which we can look one by one, if you want. And this is what I'm seeing here. If you remember, like I think this is most probably the end of the third wave.
I think your best call from Monday was showing Aussie at resistance, and then the RBA.
Reversal.
Yeah, the RBA helped the call out.
And here it is. And here it is, by the way. We had a perfect retest of this like big triangle, because that's where I think we stand. You always need to have a bigger view. And what do we have here enclosed within those two red trend lines? We have a big triangle. Okay, we had a test up here. We also see an ascending wedge, and we got a reversal. The first indication was very nice because we got like a gravestone doji after testing the triangle. Then we got a black candle. Then we got even bigger acceleration. And as you see from the wicks here, those are daily. Every single time during those 4 days, the Aussie has been tried to get bid. Sellers immediately emerged to push it lower. So, if you actually took that opportunity, I remember I did the weekend analysis and I wrote both about the Kiwi and the Aussie, that contrary to what the price action says, both of them are a good sell at current levels. So if you took that opportunity, I think you're now in a, in the comfortable situation of being able to manage a trade that went very fast in the money. And that's the kind of trading, we usually like to promote. Same thing applies, by the way, if you, for those of you that saw our USD-MXN, I wrote a blog post with Stelios on the USD-MXN and about the possible reversal from this descending wedge. Blake is monitoring as well. He has also created a pattern in play like a couple of days before we created that. We were discussing and monitoring this, a long time ago. It had all the elements we liked for the reversal, the USD-MXN. It had like the false breakdown below this 2016 August low. It had a long descending wedge, which we tested multiple times, both its resistance and its support. It was coming after a very steep downtrend and the reversal. So, this is not certain. Actually, likely the move we're going to get higher is going to be corrective, but correcting such a move can easily take us back to this area or this area. So, the risk reward is there, and it's looking very good. Actually, today, for the first time after a long time, we are also probably going to register a higher high. So that's another confirmation, along with the RSI divergence and all the signals I mentioned. We saw the signs here of a reversal, and I think it's working out very nicely at the moment. So these are the kind of trades, that you love taking as a trader, because the good thing about it is that very soon and very fast if you're right or wrong. And if you're wrong, you're risking, your risk is minimum. If you're right, your potential reward is high. By the way, since we're looking at exotic pairs, Dale, you remember that I was saying that the stall in the USD ruble is most probably a triangle, and the continuation is coming, as it seems we're breaking above today. So I'm expecting a fresh high in the USD ruble. As we had said, and USD ZAR is also showing a break after we broke above the channel. Then we created another channel. Now we're breaking above it as well. So we see a lot of exotic pairs breaking out in the direction of the US dollar. So that might be telling us something. Okay. So people, need to EuroCAD. Yes.
What's it telling us?
It's definitely telling us that we're seeing some emerging market underperformance, and the implications for risk might be that we are seeing some, some first warning signals from there. In generally, we said it the other day as well, I'm seeing a lot of things that are pointing to something big brewing in the market. I really do think that we will soon see some significant increase in volatility, and I'm not only talking about stocks. That doesn't mean that it has to happen this week. It doesn't even need that it needs to happen this month. But I really do believe that the way correlations are breaking down, the way we get some contradicting signals, I really think that within 2017 we're going to see some spectacular moves. Might be in the fall though. So but we need to be nimble. I mean, I really do believe that this year is going to give us great opportunities, great trading opportunities. It has already given us some, but I think it's about to get more interesting.
Okay.
Oil, by the way, you remember that we were expecting to see some kind of a weakness soon after we got this big leg higher. I'm a strong believer that this is not the time to be short oil. I believe that at least the first signs of weakness are more likely than not a buy for another leg higher, and then we can discuss what happens from there. So levels I'm watching are between 45.50 and 44.70, let's call it, or 50 if you want. So between that dollar, I would expect some kind of a reaction for another leg higher, most probably. I do not expect that this is going to be something terminal that is going to lead to new lows. Not yet. So don't, my personal point of view, of course everybody does whatever they want with their trading accounts, is don't jump the gun in being short oil. A friend is asking about EuroCAD. I'm still short, and I feel very comfortable with it, simply because it has been working perfectly. We had the ascending wedge, we had one leg lower, we had a textbook bear flag formation in 3 waves, A, B, C, and we've already broken to new lows. So even a minimum target for an ABC correction from up here, using the bear flag as an indication, would most probably take us to, let's measure it together, 144.50, which, as you mentioned, Dale, is just enough to test the 200 DMA and to close the gap. So, it's a perfect, if you see, it's a perfect confluence to perhaps even look in buying the pair, because at the bear flag formation target, we get the 200 daily moving average. We will just have closed the gap, and we will just have completed the bear flag, so that it's a triple confluence. I might even actually consider reversing the trade if we go there and I see a candlestick that tells me that it's reversing. I have absolutely no problem to be short from here as I was down to there and immediately close my position and buy the equivalent amount to be long again. No problem whatsoever.
Got a few questions.
Yeah, that's FTSE. Yes, let's see FTSE. First of all, SPX, since you mentioned it, Dale, this market has become extremely boring. I mean, on occasion you see some, some bigger move, but look at this. I mean, we've spent since the 1st of June roughly, we've spent more than a month oscillating in a range between 2,420 and 2,450. So within 30, we have been closing on a daily basis within roughly 30 handles since the very beginning of June. I mean, this is the essence of a boring market. you see moves like choppy moves like this big spinning top here, like this white candle that got retraced the next day, this black candle that got retraced the next day, only for that to be retraced again. I mean, there's nothing to do yet here. Yes, I can definitely see that the chance of breaking down below here and then bringing some acceleration for a fourth wave or whatever, but still, I mean, there is no real in a closing, in a daily closing basis, there is absolutely no signal to be short. And in my point of view, the longer we spend chopping around in a range, the higher the chances that the correction that everybody's waiting is going to be in time instead of in price. So the more we spend chopping around, the higher the likelihood that the next leg is going to be higher in the direction of the general trend and not against it. So I'm not saying you should be long, but I'm saying personally I'm not doing anything with SPX here, but I'm saying that really this is a boring market. There are better things to do until we see some real break and not, you know, not an assumption of a break. But let's have a look at FTSE because the question was actually about FTSE. Okay, we made this head and shoulders formation. We moved lower somewhat. The price action here does not seem to be impulsive in any way. This looks like a pennant correction. So if you're asking me what should you expect from here, and judging from the three last upper weeks that I see, I would say that the next move is lower again. I have no reason to believe that the FTSE is going to recover from current levels and mark this as a low. At least the price action that I see here at the moment does not indicate anything like this. So until actually, unless something different happens, I'm still leaning to lower prices than anything else.
How about Aussie Kiwi with that break? I think you thought it was going to go higher before this happened.
I remember that I had said plenty of times that I don't want to be involved with this, but I said that this looked like an irregular correction, and I would be looking for a continuation lower, and at the very, at the very most, I would be looking for a move to 1063, and I would see no reason to be long as long as this level held. So perhaps we won't even go to there, and perhaps this is all we're going to see. But generally, it remains what I said. I see no reason to be long. No reason. No reason. Technically speaking, there is no reason for me to want to be long this thing.
So erasing that line that you thought it could go to first means you don't really think it's going to go there anymore.
Personally, I don't even care. I'm bored of even seeing this pair, you know what I mean? You never know. You might see something like this, for example. Here is a scenario. You might see something like this, and then you're going to have a head and shoulders here, and we might say, okay, now we see a formation that leads higher. That's going to be an inverted head and shoulders with a neckline which is going to be roughly at this area, which is anyhow an area of support and resistance. You never know, but for that to happen, it would need to turn higher immediately from current levels. Unless I see something like that, that will make me think, okay, perhaps something different is brewing here. Yes, my main thesis is that it's quite likelier to continue lower than not. But as I've explained many times, I really find no reason to spend much time on Aussie Kiwi. Much better trading opportunities out there at the moment. Kiwi breaking below the wedge. What I don't like is the fact that it doesn't seem to be accelerating, but that doesn't say much yet. So, I would be giving it more time. I'm still short Kiwi. I am in the money, but I would like to see an acceleration soon. Otherwise, I'm going to take some profits again and let it go. Especially if I see an inability to break below this zone, let's call it roughly the 72.30 zone. If I see an inability to break soon below this zone, I'm going to be worried. I'm not worried yet though, so I remain short. Looks good. I had a target. FTSE we answered. USD ZAR loving it. ZAR is about political central bank. Yes. EuroCAD we talked about. NZD, so KiwiCAD. A friend is asking about Steve Dale. I've got an interesting pair for you. KiwiCAD. I love shorting that pair on a retrace. Nothing happening in New Zealand economy. CAD economy booming. Thoughts on levels you may. Okay, let's have a look at it together then. And let's see what we see. Okay. Yes, the problem with this is the fact that it broke above this triangle, and this break, appeared to be terminal for the time being, and now we're getting a move which can either be an ABC or it can be an impulsive move. We're going to find out what kind of a move this one is. I can tell you one fact for sure. As long as this zone holds, I'm with you, which means that a rebound to 95.20 most probably is a good sell than anything else. On the other hand, if we retest this zone and we rebound strongly, that's another story. But for the time being, I think that you're right. A pullback to this level is a good idea to short and see what happens from there. Okay, so two different scenarios I see at the moment, but both of them lead to some lower prices before, at least lower prices before higher. So that's about KiwiCAD. We can also have a look at AussieCAD because it was testing some important levels and it did break down. I'm synthetically short this pair as I explained in the previous webinar because I was seeing this breakdown likely, because this time when we retested for what was it, fifth time or whatever, this zone, we didn't even manage to produce a pullback. So I remain short this pair. It gave us 3 tests on the highs, so this is one of the rare occasions that you actually see a triple top. And then we got this zone that held multiple times, but it's now not now failing. It now failed actually, and it failed decisively. If you look yesterday's candle, I mean, this is an acceleration lower if anything else. So AussieCAD looks weak as well, and most probably you should treat it the same way as you would KiwiCAD. So any move to retest this 99.50 zone is probably a good sell if nothing else. So CAD crosses, you're playing Kiwi weakness via USD. UNZD looks good for a long too, but like you said, it failed to push higher and now has retraced. Okay, let's have a look at Euro Aussie then, and EuroCAD, and Euro Kiwi, sorry. Euro Aussie. I remain long, by the way, and it seems to be rebounding just nicely. If we see new highs, as I've said, the next resistance is here at 150.40, and it's quite likely that we're going to see that. And having to do with Euro Kiwi, most probably a triangle or whatever. This is some kind of short-term consolidation that can easily lead to higher prices. So I think this is what you should be monitoring. Very likely scenario. I don't think the upside for Euro Kiwi is done. Candles like this that we got on the 27th of June are very rarely firecrackers, very rarely. So we got a huge outside key reversal. We're now seeing some short-term consolidation. I would at least expect another thrust higher, at least at the very least another move higher to this area. So if you're long Euro Kiwi, personally I wouldn't dump it. I wouldn't I wouldn't quit on this effort. COT data is very long Kiwi as well, says Dan, and he's absolutely right about it. Not the time to fight the Fed here. We see that a bounce to 99 in dollar that they were looking for, and Luca is sharing a chart. Let's see the chart that Luca is actually sharing with us. There we go. Let's see what Luca is watching at the moment. Yep. And look, actually, let's have a closer look to the DXY, because you're absolutely right. We should have a look at it regardless. And here it is. I had an area of interest here. We never reached it. But there is absolutely no question about one thing, and people should not disregard this, that this formation that I'm circling here, those three candles here, this is a very, very clean morning star formation. This is a very bullish combination of candles. Morning star and evening star formations are most likely the most reliable reversal formations having to do with candlestick analysis. So this formation you should not disregard. I'm not saying every formation has a chance to fail, but this formation has the least chances most probably. And currently we are testing again a zone that we tested, twice in the recent past, and we also tested, if you go back, plenty of times. So in my opinion, seeing a close above 96.50 is going to be another signal that perhaps something is changing in the bearish trend of the US dollar. We've already seen the first signal. It's a candlestick signal. A close above 96.50 is going to be another signal. Then perhaps a good idea would be to monitor this line that I'm going to draw now. So I think monitoring this trend line is going to be a good idea afterwards, because a break above it is going to give us one more signal that something is changing. So a break above here leads us exactly to 99, because this is the zone you see here. So if I see a break, especially, sometimes you get very lucky. You get something like this, for example. You might get something like this. Which is perfect. Like a break above the descending trend line, a retest of it, and boom. Why not?
Hey, Steve.
Hello, Stelio.
Hi. Hi, everybody. Just one thing I wanted to point out is, sorry, I've got my kids here. Okay, sorry about that. We've got the FOMC minutes today, and if you look at Fed Fund futures, they are pricing currently just under 2 more hikes for the rest of this year and the next. So we have to think about, if there is any kind of surprise, which way... It's
going to be a hawkish one.
Exactly, because if there's a
it's going to be a hawkish one.
Yeah, if there's a double surprise, what is the market going to do? Price cuts? No way. Price zero? No way. Again, no way. Maybe it goes to price one.
You're absolutely right. You're absolutely right. That's why guys and gals, it's important, to have every perspective, because Stelios just gave a very important macro perspective, which is the following. The Fed indicated clearly in the previous Yellen press conference, she indicated clearly, actually, but she's the Fed. I mean, she makes the decisions there. That they are on a set path, and they showed confidence and a strong belief that unless something happens, they're going to follow that path. That path definitely indicated more than 2 hikes for the upcoming year and this year. Most probably, if we take them, if we believe their point of view, we should be expecting another hike this year, and then I don't know, at least 2, 3 next year. Okay, for the whole year, if things go well with the economy. And the market at the moment is pricing in less than 2 in a period that, if we believed the Fed, it should have been pricing, let's say, 3 to 4. So a dovish surprise is going to do little to affect the dollar on the downside. A hawkish surprise is definitely going to have more effect on the dollar. Right, Stelio?
Yes, and they don't actually have to hike, 3 times next year, but it's very easy for the market to go and price that ahead of it. So,
or to be honest, it's very easy for the market to at least go ahead and say that instead of pricing less than 2 for the following, what is it, like 16 months or whatever it is, for the next 16, 17 months, I'm going to be pricing, let's say, close to 3 hikes. That on its own should move the dollar.
Yeah. I mean, obviously anything can happen, and the Fed might not hike again, or they might hike once and pause. Anything can happen. All we're saying is that the risk, especially going into tonight's FOMC meeting minutes, is skewed towards the upside. That's all I'm saying. So, I am personally neutral in the dollar now, but I think there's a good chance it might get, sentiment might get skewed tonight. So
Ronit, by the way, is saying something very right, and this is the reason you haven't seen big weakness or whatever in some crosses. He says that it's not only he says key is all yields are moving, not just Fed, and he's right about it. We've seen a coordinated move in bonds. Look at the Bund, look at the 10-year Treasury. Yes, and they all seem to be turning bearish, which means bullish yields, because they have an inverse relationship. Yes, you're right, the French ones as well, etc. British, French, German, etc., etc., etc. And he's actually very right. So, what he points to is that it's going to be all about a relative performance and not like purely the performance of the treasuries, and he's right about it. But still, the point remains that the market is obviously not trusting the Fed so much, and the market seems to be remaining more dovish. Is more dovish the U.S. economy than the Fed is actually. So we need to see what happens to that, and definitely the minutes have the ability to move the market today. And as Stelio said, a hawkish surprise will definitely help the dollar more than a dovish surprise would do it harm. So, from a macro perspective, the risk reward is probably to be long the dollar ahead than being short the dollar ahead, and I think he's absolutely right with that. By the way, we're seeing a nice rally back on Nasdaq, and since we mentioned that, I have to reiterate here that we had a target of 55.84. That target actually we did tag. So if this is just an ABC correction, which we're going to find out, we already accomplished that. So what happens from here is going to show us if this is going to be something deeper or if that's it. And to be honest, the idea that perhaps that's it bodes well with the fact that the SPX has completely failed to give us any downside break of any significant zones. We just managed to tag last week, like momentarily intraday, the first serious support, which was at 2,400, and we got rejected from that immediately. And we never actually managed to close below 2,400 and roughly 20, let's say 19, 20, whatever it was. So SPX never actually looked to be correcting lower, and Nasdaq is now showing a potential ABC. So honestly speaking, I wouldn't be short US stocks at the moment, not from current levels. If you're already short and you want to manage your trade, fine. Establishing it here looks dangerous to me. Amazon, Ronit is talking about Amazon and the rising wedge. Okay, let's have a look at it. This is what I have on Amazon. This is what I'm seeing in Amazon. I'm sure you can draft other wedges as well, but we had a big one here. We had an overthrow. We had a smaller one here. That was a clean, perfect break. I mean, this was an overthrow of a big wedge within a small wedge, and that was a great short. Currently, more or less like a triangle, this looks like to me. Let's see what happens. If we break below here, then we're bound to retest the big ascending wedge, which a retest would come, let's say, at around 900 and some spare bucks, like 900, 910 bucks. So this is what I'm seeing in Amazon on it. I don't know if you have another chart you want to share, but this is what I'm seeing. Silver, gold, if you have any time, please. Yes, sure. And actually, our mistake for not visiting it. I'm still short silver, by the way, and quite happy with it. I think that was a very pretty and clean bear flag. We're currently testing a zone that's quite important to me. I want to see what happens from here, the 1580-85 zone. As I wrote in the intraday analysis earlier in the day, if this zone fails to produce a rebound, then I think that it's more or less a certainty that we're going to move all the way to fulfill the bear flag, and the bear flag target comes at 1550. So bear flag points to there. I first want to see what's going to happen with this zone, but it's very likely that we're going to actually achieve the target, and we see what happens from that point. I'm short from 1650. I remain short. I've already moved my stop loss above this candle's high because this was an important candle. So I'm currently risking like 15 cents, and you know, I'm already more than 50 cents in the money. So we're going to see what happens. But I see nothing bullish at the moment here. And if you go at gold, I had stressed out many times that this zone was extremely important. This ascending triangle trend line, its confluence with the 200 EMA here. We also had this small triangle. So I had said that the failure of this zone smells trouble. So if you're asking me what would make me be bullish gold at the moment, the question is only a big reversal, because unless I see something like that that's going to, you know, put questions in the bearish thesis, I have no reason to be bullish gold at the moment. Actually, if I wasn't short silver, I might have looked to be short gold, but I don't find any particular reason that I should be, you know, short both. Since they're decently correlated with each other, I feel comfortable being short one of the precious metals. Ronit says that silver is tricky on long term. 1650 is a pivot. Yes, you're absolutely right. And he's also sharing a chart. Let's have a look at his chart. Probably it's the Amazon chart. I asked him to show me if he's seeing something different. Okay, actually you're seeing the same wedge I'm seeing. This is the overthrow, but this is a longer term. This is the overthrow that I showed. The overthrow itself as I showed, is also an ascending wedge. So I totally agree with you. We're seeing the same thing, Ronet. Yes, I'm totally with you, mate. You know, two different pairs of eyes are seeing the same things. That's a good thing. And you know, I know that your analysis is always solid. So I'm happy to be on the same side.
What do you think of
what
do you think of Mazda RX-7's not the year 1993?
This one. I'm actually looking to buy it. This one. I'm an avid fan of cars, as you know, and I'm looking to buy this beautiful piece of machinery, of Japanese machinery here, so I can actually rebuild it from scratch. It's in a very good condition, but I'm actually looking to rebuild it from scratch. I want to rebuild the engine and everything, because, you know, I want a fun car with my wife, although my wife is going to be a little bit angry initially, but I know that she's going to turn around to it. So yeah, I'm actually looking to buy this.
That doesn't look like a family car, my friend.
No, it's not. Actually, I would never put Jason in it.
Yeah.
Only my wife. Good thing we have good friends, so if something happens to us, you know, they're going to take care of Jason. I'm looking at you, Stelios. You always wanted the son, didn't you?
Of course, of course.
Yes. So Maria is asking, hi, may I ask a question about gold as ForexAnalytix subscriber? Of course you can ask any questions you want, regardless. This is a free webinar, as we've said many times to people, and you know, definitely Dale is by far a superior salesman than I am. You know, we are very happy to share what we see with the community, even in pairs that we do not cover in ForexAnalytix. But you know, if you want to have timely alerts of what we're doing, how we're doing it, what we're seeing, etc., 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 you know, you need to be a ForexAnalytix subscriber. But we're more than happy in educating and showing our point of view, even for people that cannot afford a ForexAnalytix subscription. You know, we really want to help invert the curve. We really want to help people become better in trading.
Well, you're a pretty good salesman there too, Steve-O. That was good.
So Maria, what is your question? You asked if you can ask a question, and the answer is yes, you can ask a question. Why is that trade not posted in only Blake USD MXN posted in DAX, not yours? Yes, okay, Maria. Every time we see something, it doesn't mean that we also post a ForexAnalytix pattern in play for that, because we like to use stricter criteria, and you know, I'm not supposed, and I'm not going to do that. I'm not going to advertise that. But if you see the patterns in play, which are also, you know, educational nature, their performance is excellent. The reason for that is that we want to be very, very careful in what we post there, and we also want the patterns that we post there to always have an educational background. So, you know, we make a careful selection, and the results of the careful selections are very obvious. If you go to closed patterns in play, you'll find pattern in play statistics just below it. And if you see there, you'll understand why we want to be, you know, very selective, you know, to achieve these kind of results. Which short are you talking about, by the way? The silver short? No, nobody's short gold at the moment, as far as I know. I'm not short gold, for example. I'm short silver. I'm just saying that the breakdown below this level, you know, was a very important bearish break. Don't forget that in order for you to want to be short something, you also want to have the proper reward to risk ratio. You want to be able to actually establish the proper criteria for a trade. So you know, when I was asked here, when the trade was here, and I was asked if I would be short or long, my answer was that if I had to be something, I would be short, because I believe that it's going to move lower. But having this trend line here, you know, made it probably a bad risk. That's why, for example, I wouldn't want to be short, although I believe in the short side. So in order for you to want to establish a position, you need to have several criteria that ideally all of them should be met. So unless we see all our criteria being met, we usually do not publish a pattern in play. Yes. Correct, Maria. We're posting on ForexAnalytix our calls that we believe that have the higher chances of actually playing out to achieve, the best possible results. By the way, I'm going to have a look at USD NOK. A friend is asking about it. By the way, I'm still short the USD NOK. We're seeing a reaction. I expected that we would soon see it. And I remember that I said here to Dale the following, that any reaction after we get this break, I would like it to ideally hold this zone. So far, so good. I'm short from the highs, and I want to see how this is going to evolve. If this just ends up being a bear flag, we also have the 200 EMA at 843. So as long as we remain below 843, and I don't see some impulsive price action higher, I'm going to keep my short. So nothing has changed much in USD NOK. Gold 1,247 is the pivot now, says Ronit. So let's have a look at gold once again. Who do we have for an interview today, by the way, Dale?
Jason Sen at Day Trade Ideas.
Okay, very nice. Okay, you're saying 47. I'm not saying that the general 45 zone is important to me, but to me, my friend, this area is probably even more important. This area, which is around 1,258 to 60. So, for me, even penetrating through that, this is the zone I would actually want to see getting taken out, before I actually consider, turning bullish. But it's a different point of view. I mean, you might actually be right, but this is the important zone for me. I'm looking at a little bit higher prices for confirmation of some behavioral change. Also, we haven't seen that in some time. Palladium is also resuming, a bearish move after giving us the overthrow here. But I want to see how this second leg of the move lower is going to evolve. We had a nice evening star formation here after the retracement, the two-day retracement, and we're obviously going to continue lower here because the price action was very clear. I mean, we got those 2 days, then we got a pin bar. Today we're seeing some bearish price action. So I want to see if this is going to be a 1, 2, 3, 4, 5 for a C and then a move higher. So the zone I'm monitoring here in Palladium, for whoever is still checking it to determine what's going to happen, is actually this. Okay, so I want to see what's going to happen from here. And then the next zone is here, the 815. As long as we remain above this wedge's support, despite the overthrow, you cannot get overly bearish. But I first want to see what's going to happen from a test of 830. That's an important level. Hi, Steve, could you please do an Elliott wave count on dollar index daily chart? Thank you. Actually, no, I'm not going to do that for you. I'm going to do something better for you. I do Elliott waves, yes, but our in-house specialist is obviously Grega. So let's have a look. Let me bring you Grega's analysis on that. This is a freebie.
Freebie, Steve.
Oh, yes. So let's have a look at it. There you go. He thinks that this is an A, B, C, which means that he's actually bullish. And this is his alternative count. So this is his second scenario. His main scenario is talking about a reversal now. So actually, if his main scenario plays out, it means that you should not see lower prices to the prices we've already seen. So actually, his main scenario already still, not already, so the correct word is still has an appealing risk reward, because he's seeing, he's seeing a first move lower in A, a corrective move higher in an ABC form, and then an extended 5-wave move for a C. 1, 2, 1, 2, 3, 4, 5 completes 3 of C. Then we get the 4 of C and then the 5 of C. So if this attempt of catching the falling knife here in dollar proves right, as I said, it means that we should not see any lower prices, which means that still this point of view from Gregor has a very appealing reward to risk. So now you know. Okay, perfect. So who else wants to know what? 1 hour wave 3 gap incoming is asking. Okay, let's have a look at the gap. Sorry, I'm not going to have a look at the 1 hour for you, because generally I try to keep myself away from such short-term charts, because you know they mess up with my point of view without any reason. I like to watch time frames from 4 hours and above, and but they can tell you that much, that this looks to me like a wave 4 in a triangle. So if we zoom in, this looks like a 1, 2, 3, wave 4 being a triangle. So if that proves to be the case, we might not even see a retrace of 144.80 zone before the 5th wave up. So now the more we chop around in this area, the higher the chances that the 5th wave is going to come directly from here. Okay, so there is a chance that we're not going to even see a retracement for a wave 4, and the wave 4 is a triangle. And I have no problem visiting again the 4-hour chart just to get a verification on what I see on the daily. And if we actually do that, let's see. You see, this is likely some triangle that's playing out at the moment. We might also get a new thrust higher and get a wedge, and that being wave 5. So you also have that possibility. In any case, I would most likely expect at least one more leg higher before a correction lower. So in any case, at the very minimum, I would expect something like that. Or alternatively, you might see something like that. And then a move higher. My main scenario remains a fresh high before retracing, before getting a deeper retracement. Let's clean all that. Let's assume that we're getting a new high or whatever, and then we're retracing. I would expect that the retracement from wherever it happens. A good area to retrace to would be the 144 area. If you see on the 4-hour chart, you can see multiple confluences here of levels, I mean highs, lows, etc., support resistances. So probably another move higher, then a deeper retracement, perhaps to test 144 and then higher. It might not even be that deep, because there is another, it depends on how much we move higher, there is another area of interest, which is this one. So when we see a correction, first area would be looking for is this. Second area would be looking, if we penetrate, it would be this. Okay, my friends, happy with your Gabi? Current Euro-USD daily chart looks similar to June, July 2002, which suggests a major trend reversal for Euro-USD. What is your opinion? Yes, okay. I'm not going to give you such a long-term opinion, simply because I don't even like to have one. Because I like to see a smaller reversal and then to take it from there. And whenever a longer term opinion comes because I see something clear technically, then it comes. But I will tell you one thing. Let's go to Euro USD. I already spoke of a reversal from up here the day we actually tested this level. Blake was watching this as well. And what I said, which remains a fact, is the following: that we had, I said on that the very first day, on that very last day that we saw the high, that we have two scenarios. One scenario is penetrating through and retesting this zone, in which case the Euro USD would be clearly bullish. The alternative scenario is getting rejected from there. We did get that. We did get rejected from there. So what I want to see from this point on is the following. Okay, we got the initial rejection. Now the question is the following. Is this rejection a correction? Is it the beginning of a correction? Or this is something different? I'm going to tell you the following. First level I'm monitoring is 113. Second level I'm monitoring is 111.40. Unless we take 111.40 and break below it, I have no risk reward to bet that this is a major reversal. So unless that happens, I will tend to believe that the more likely scenario is that this is another correction lower. If I see 111.40 being taken out, then I'm going to start looking at alternative possibilities. But if you monitor at the levels, you don't really care about it. Because, for example, if you were short from this area because this was a good area to be rejected, you don't really care initially if this is a big reversal you're looking for or a correction move low or a corrective move lower, because then you already have a trade in place with an amazing risk reward, and you can monitor the structure of the move lower. Because what is going actually to tell me if this is going to be a reversal or a correction is the structure of the move lower. It's too early yet. We have too little price action, so I can tell you that this structure is impulsive or corrective, because you can see multiple things evolve here. But we're going to be monitoring together, and when I see something that tells me this is corrective or this is impulsive, I'm not going to hesitate telling you. Okay?
Thank you, Steve. Jason Sen, I just made you the presenter. Looking forward to hearing your voice. Nice review.
I see we have more questions, Dale. I'm going to be here tomorrow. Please come back with whatever questions we didn't answer. I will happily look at anything you want us to look at tomorrow. Thank you very much, Dale. Enjoy the interview. And thank you, everybody.
Jason. How are you, Jace?
I'm good. Can you hear me?
I can, buddy. How are you? Can you hear me?
I can hear you. Can you hear me? Hello?
I can, yes. You're coming in loud and clear, buddy. How are you?
I'm good, mate. How are you? It's been a little while since we last spoke.
Yeah, I have your website up here. You know,
Yeah.
I'm not the presenter. I'm not showing it right now. But as I look at it, and I'm waiting for your screen, Forex Best Awards, Buy-Side Analysis, 2015. Best Buy-Side Analysis Contributor, 2015. They forget you this year?
I was nominated last year, but
Oh, yeah.
couldn't win it 2 years in a row.
You were like Hillary Clinton, just nominated, right?
Yeah, I wasn't good enough for next year. There you go. That's the
So
way
I really appreciate you taking time out of trading day to talk to us today, Jason. And I know that you provide signals and training, and your work is well respected by institutions. So if you could share your screen, maybe we could get an idea of the kind of things that you look for, what you're even seeing today that has generated such a great reputation that you have. You know how to share the screen?
Yeah, I've just clicked on it, and it's obviously not sharing, is it not? Okay, obviously done something wrong here.
Yeah, I'm not seeing it yet.
Okay, I've clicked it.
There we go. Okay.
You got something?
Got it. Yeah, so I'm not sure what chart we're looking at. Maybe that's Aussie to the left. Is this Aussie? both
Yeah, this
charts?
is the Aussie. Yeah, there are 4 Forex pairs that I follow mostly, so I might as well start by running through those. So this is Aussie.
Okay.
I'm hoping you can. Is my cursor moving? I'm just making sure I've got the right screen up because I'm showing you a daily chart at the moment.
Okay, I'm not seeing your cursor, but I'm seeing the charts are live, so I'm seeing some movement of the candles. Red candle making you low at 75.70 here.
Okay,
So,
well,
was this a classic Jason Sen day trade signal from were you alert to it before the RBA decided to hang loose?
well, the RBA did me a huge favor, really. I mean, this is pretty straightforward. I'm showing you the daily chart here. Hopefully, I'm showing you the daily chart if I'm showing you the right screen. So you can see we've got a trend line going back to April 2016. So what's that? About 13, 14, 13, 15 months. So I mean, it's pretty simple.
I'm seeing the trend line from, it looks like early June is where it's anchored at the low at 73.68, then another hit mid-June, late June around 75.60, and we broke down and then had a back test up around 76.30. So that's the chart on the left-hand side of the screen. Not sure what the TF is on either of them, actually.
Oh, okay. I'm sharing you with the wrong screen. So
you could unshare and then just select the other screen.
okay. I had a feeling I might have done that wrong.
So when you click the share function,
Yeah.
it shows screen 1 or 2.
Okay.
All right. Looks like the same, but okay. So where are you at in Aussie? This
Okay.
counter trend scalp, and are 90% of your trades day trades, Jason? Because that's your handle.
Yeah, they are. So I'm now going to try and get the right chart up there. Otherwise, it's all going to get a bit confusing.
Okay, now I see a big triangle on the right.
Okay, this is a bit better.
Okay.
Okay, so this is what I was,
okay.
yeah, this is what I'm trying to show you. It's all a bit scrunched up now, but anyway, I think you get the picture. So this is the daily chart, and what I was really trying to show you is this trend line going back to April 2016. So
I see. Okay.
I mean, really, the problem with most of these markets now is that everything's just so everything's been trading sideways, or so much has been trading sideways for such a long time. It has been very tricky. So
so you're basically you know, no trends except for maybe what's happened in euro over the last few months, but a lot of range trading is what you're saying.
there really has. So you know, all I can say is that we have to really wait for the extremes of the ranges to be hit, and then that's your chance. So this was the chance for the Aussie, and really the RBA did me a favor by holding those rates, and then it did cause a pullback. I think I'm still having trouble with these charts, but I'll get them right in a minute.
So that was a great trade. You have averages of like what kind of R to Rs you look for on a day trade. I think that's a pretty important thing when you're day trading, and also are you a believer in taking half off when you have, you know, maybe 20, 30 pips in your direction and then holding the rest for targets? Because in a day, you're probably looking to take a percentage of the daily average trading range. You're not trying to get the whole thing.
Oh, most definitely, especially at times like this when really the daily ranges are a lot smaller than they used to be when I was trading many decades ago. So yeah, the volatility has been steadily decreasing.
It's funny, it was about a week ago, Jason, and I think that, I don't know, maybe Draghi made a statement, and the comment here was, oh, look, the euro's spiking. And it was a 35 pip move. So now we call 35, 40 pip moves a spike when it used to be 100.
Oh man, don't get me started. Yeah, exactly. Yeah. 150 pip range in a day was normal, and it wasn't like you spent all day moving up 150 pips. So you'd be up 75, down 50. Then you're. So I mean, there was chances, many chances throughout the day. You could have.
How did you train yourself? How did you train yourself to lower your expectations with decreased volatility in smaller ranges?
I found something else to do during the day than watch the screen hour to hour. I'm an old man and I can't stand in front of a screen scalping 10 to 20 pips anymore, I'm afraid. So I just put some levels in, see if I can get a hit on a trade or two, and if I'm lucky, maybe I'll get one or two trades off and see how it goes. And I like your strategy of taking half off when you see a decent 30, 40 pip move, and then hopefully running the rest if you can. So I just threw some fibs on this chart. This is really all I would do in this situation. Throw some fibs on, see how they work, and they do usually work pretty well. 75.81 was your first 38.2% fib, and we bottomed out yesterday at 88, so we only missed it by 7 pips. And you can see the 23.6% fib up here at 76.31. What's the high today? 76.32. So then I just trade the fibs all the way down, looking for the move eventually, hopefully back down to sort of 73.15, 74.15, 74.05. But God knows how long it'll take us to get there if we ever do get there.
Do you correlate? I know you're a day trader, but do you look at correlations like gold was very weak or never really got going while the dollar was getting hit? Do you correlate Aussie with anything? Do you look at that, or just treat each individual instrument as its own being or individual entity?
I trade everything as its own entity. I've tried to look at a correlation. For me personally, it doesn't work. And I get, well, like when I used to do a lot of webinars, weekly webinars on FX Street, I was always asked about these correlations. And I said, look, maybe you can see it, but it just doesn't work for me. I don't see how, I think correlations fell apart quite a while ago. So I just ignore them and I just look at things on their own merits. Yeah, and you're right about gold. Gold really hasn't followed, for example, the dollar index. It seems to have a mind of its own when you talk about the dollar.
Okay, let's see. So this was your Aussie trade coming in this week. What are your preferred? You said you trade mainly 4. So is it Aussie and what are the other 3?
Well, I'm just trying to get the gold chart up now as we speak, but my system seems to be really slow for some reason. I hope it hasn't frozen. That wouldn't be very good. Let's see if I can load it.
Any of the other majors?
Well, actually, I was going to talk about gold because
gold,
only because, gosh, well, I'm trying to plug my services, but really gold was horrible. If this chart does come up, we had a 4.5-year trend line, and this was something I was really looking at. Up around the sort of 1260, 1270 level. I mean, everyone was looking at it, not just me. And it did completely fool me. I thought we were going to break high. We got through it earlier in the year when we got up to 1295. And I figured false
breakout. Those false breakouts. So you've probably seen hundreds of false breakouts in your career, because I know you've been doing it for a while. Do you believe that some of the best trades are failed breakouts and you just take the failure signal of a breakout? Or does it take you some time to wrap your head around reversing biases on something like that?
The truth is, breakouts I find them the most difficult trades, because you only really. So I always try to fade the move. So just like in the Aussie, there selling it up at the resistance level, I'll always try it, and I did do that with the gold move the first time around, and it worked. And then the second time around, when it broke up through that sort of 1270 area again, and I saw it heading towards 1295, I thought, second break, this is going to go. And of course, we double topped up at 1295, and then since then it's just collapsed. So that one did catch me out. But now it looks pretty horrible. We had some decent support around below 1230 area with some trend lines and some moving averages. I think we had like a 6-month trend line. Gold had been trying to climb all this year, but that looks like it's broken now, so I've pretty much given up on gold. It looks like it can sink further. The question now is, do we break the May low? Oh, finally my system's updating. I don't know why it's so slow. But now the big level is obviously the May low down at 1218, 1216 from memory, which also coincides with the 500-day moving average, which has held on this first test. So now it's a question of, do we hold below the low 1230 area and break the mid-12 teens, or do we push up back through the 1230s? I think we'll continue lower.
So let me ask you this. How did you select a 500-day moving average? How did you come up with 500?
I've just tried so many things over the years. I've looked at everything. I was looking at the chat before me, and it's Elliott Wave, which I think is terrific if you can understand it, because I could never get my head around it. I've had it explained to me by some guys that really do make it work for them, and I just can't make it work for me. I have to write reports on up to 20 markets every morning and try and make sense of them and try and at least pick some decent levels, even if I can't spot the right direction. And Elliott Wave, for example, is something that I just couldn't make work consistently for me on a daily basis. So I really do keep it very simple. Trend lines, moving averages, Fibonacci, obviously price action. And I just find that the 500-day moving average just seems to work. It's just one of those things that I tried. Most of the things that I tried didn't work consistently enough, but it's one of those things that is worth paying attention to.
And you use that on all time frames? What are the two main, your main time frames for day trading?
Okay, so I look at the hour, the 4 hour, the day, but I also do look at the week, and sometimes I try to remind myself to even look at the monthly chart at least once a month.
Okay.
Yeah, I'm not a guy that's scalping, so I'm not in and out, every 15 minutes, half an hour. So I think an hour is the shortest time that I personally need to look at.
Are you swing trading a little bit now as well, Jason, because of the compression of ranges? That you can't accomplish what you used to be able to day trading because of compressed ranges? Are you carrying things overnight more than you ever used to?
Yeah, definitely.
Okay.
Until
I'm just
about,
diagnosing you, man. I have you on my trading psychology couch right now. So I was just guessing that you would, because, you get used to a certain amount of pips and everything, and, good traders adjust to market conditions. So I just took a shot, figured you were probably swing trading a little bit, or 2-3 day trades, holding trades for a couple days at a time. Are you doing more of that?
Yeah, you're absolutely right. As I say, I'm not a scalper. I'm not a guy that can stand in front of the screen for hours and hours a day. I'm too old for it. I did that on the trading floor.
Well, you said you do something else now. What is it? I have an expression that trading is what we do. It's not who we are. So are you taking time to pursue other interests, or is it just something else within the industry?
Well, I'm definitely looking at swing trades, because I'm used to putting a trade on with a 30 or 40 pip stop, and then looking for obviously at least twice that on the profit side. So the only way you can do that these days is really almost run a trade for the whole week. But yeah, I mean, I do like the analysis, and I'm enjoying the trading less and less. So I am actually doing other things, but I've been moving towards that for quite a while now. I'm sort of
It sounds
I
private.
live in Thailand, and
sounds private.
no,
Well,
I moved to Thailand 3 years ago.
Let us know a little bit about Jason Sen, besides okay, numbers and pivots and stops and targets. What are you doing, buddy?
Okay, well, I moved to Thailand about 3 years ago, and I've been developing property here and renting out to tourists, actually, which is fun. You meet a lot of people, and I've been learning by trial and error. I'm not a property developer. I got in way too deep.
It's so, trading has afforded you the opportunity to, follow your heart, and do some other things to make your life interesting.
When you're used to seeing your accounts go up and down, morning, noon, and night, after a while you just think, I need a bit, you know, something else. So I've always had a sideline in property, and now I've decided to go into it a little bit heavier.
How's the Thailand real estate market? Is it booming like everywhere else in the world?
No, it's absolutely dreadful. My timing is appalling.
Okay. Well, you know, everything cycles, buddy. So,
yeah, that's
you
what
know,
I'm hoping.
I find it interesting that, you know, you're doing other things, and you know what, you're also smart. I recommend that people have more than one revenue stream besides their trading account, because I don't know if you've discovered, but if you have more than one revenue stream, then every trade doesn't become too important. When it's your only revenue stream, you tend to make every trade too important to you. Do you agree with that?
Absolutely. When I was in my 20s and trading on the floor, it was very exciting, but I was fed up being, you know, up and down. You have to have something stable in your life, and you have to have another income source, and obviously passive income works really nicely if you can create that. And so many people say to me, oh yeah, I'm ready to give my day job up now and become a trader. And I always tell them, for God's sakes, please don't. If you've got a decent day job and you're making good money, you know, do trading on the side. Don't try to, you know, trading as a career, most people don't make it. So
yeah, I get, you know what question I get, buddy? I get, Dale, can I trade for a living with 10K? You know what I say? Mm-hmm. Yes, if you want to live beneath an underpass. Yeah,
well, exactly. It's crazy because people think, oh, okay, 10K, well, I can make 50% a month. You can't. You just cannot. There's no business that you can set up with 10 grand and make 50% a month and trade. And if you can, trading is definitely one of the harder ones to do. So yeah,
why don't we wrap it with you showing your website and your business model and what you're doing, and maybe we could generate a little business for you.
Okay, thanks. Yeah, well, my website. Okay.
And I'll be over in Thailand, and I was wondering if you could, you know, carry me around in a rickshaw.
Mate, I'd love to. You're always welcome here, Dale. Hey, I've got 7 villas I'm building, so there's going to be plenty of room for you here.
Okay, and you know what? We'll carry around our mobile apps, and we could put the rickshaw down if we have to do something in the market. What do you think?
Well,
be a good afternoon?
I tell you, trading on the floor, we always used to say, hey, one day this will all be computer-based, and one day we'll have these laptops, and we'll all sit on the beach and be trading. And the funny thing is, you can do it now. Yeah. Not that it's easy. It's harder than it's ever been, but the funny thing is you can actually do what we used to dream about.
Okay, so your website's coming up, and you have a crew or you're one-man show?
I'm a one-man show. So
okay,
there we go. There's the website. Yeah, I'm a one-man show.
Look at all those awards Jason won.
There you go. Way.
Look at that.
Yeah.
Before he became Hillary Clinton last year, but before that he was like Barack Obama, winning awards.
There you go.
I've won the Nobel Peace Prize for humanitarianism for doing.
I voted for you.
For doing free webinars most of my career.
Yeah. So you deserved it.
All right. So tell us what you do for people here. You have signals, or you teach, or what do you do?
I teach. We've got an online trading course here, which I spent about a year writing. It took me made up about 100 pages, and then it's pretty much everything I've ever learnt, everything that I've ever found useful and consistent. So there's that, cool. And then I write reports on about 18 markets every day. So I get up at 7 o'clock in the morning here in Thailand, so they're all done by the time Europe opens, well before that. These are the markets that I cover, and then I also provide a premium service, here you go, where you get all the Forex markets, you get oil, you get gold, and I even throw the S&P in, and then I post my trades on a spreadsheet, or the trades that I'm hoping to do during the day. They're the levels that I feel are the best levels to put a swing trade on.
Well, my trading warrior brother, was a pleasure speaking to you again. I'm glad I was able to pry out of you, you know, what else you're doing, and I wish you success in the property market in Thailand. I've never been there. I hear it's like paradise on earth. And is this a recent relocation there? How long have you been there?
When the floor shut, I moved to Spain. I lived on the south coast of Spain, and I used to trade out of Gibraltar. So I got a taste for the sun. And then 3 years ago, I moved to Thailand. The kids love it. Wife loves it, and I'm way too busy still. I'm sure I was supposed to be retired by now. Something went really wrong.
Well, may pips rain down on you in Thailand, and thank you so much for spending time and talking to us. I encourage people to follow Jason. His Twitter handle is @DayTradeSignals. Is that correct?
That's the one. Thanks so much, Dale.
All right, Jason.
Day Trade Signals. Cheers.
Good hunting, buddy.
Thanks,
all right,
mate. Good to speak to you.
Okay. Don't forget to reserve the rickshaw for me when I get over there. One millennium.
It's good.
All right, buddy?
It'll have a number plate with your name on it.
You have a great sense of humor, man. Thanks so much, Jason. My trading warrior brother, Jason Sen, face. See everyone tomorrow. Adam Button's going to be with us tomorrow. Remember, don't just count your pips, count your blessings. Thank you, Steve Volge. Thank you, Stelios. And thank you, Ronit, and all you participants in FACE today. You're very welcome. See everyone tomorrow. Adam Button will be with us.